Welcome back, everyone, and thank you for joining us for another Prime Capital Financial Market Breakdown. I'm your host, Tara McBride, Chief Marketing Officer here at Prime Capital Financial. Today, we're asking a question that's been circulating among seasoned investors and headline chasers alike. Is this 2001 and 2022 all over again, or just market deja vu with better suits and sharper tools? I'm joined by two familiar voices who understand that context is currency and hindsight is only helpful if you know how to use it. Clayton Allison, Portfolio Manager, and Will McGuff, Deputy Chief Investment Officer. Together, we'll unpack the parallels, the pitfalls, and what history can and can't teach us about what's coming next. And if you prefer your market insights with a side of strategy, be sure to grab your free companion guide, Tax Strategies for High-Income Earners. It's a straightforward, no-fluff resource to help you cut through the noise and stay anchored in what matters. You can scan the QR code on your screen, or you'll find the link in the show notes. Okay, let's get into it. Will, help us out. Give us a recap of what's happened this year.
Thanks, Tara, and I love the context as currency comment. So let's give you a little bit of context about what has happened so far in 2025. It's no surprise, new regime in Washington, D.C. has caused a little bit of turmoil in the markets. Typically, Wall Street likes dysfunction in Washington, D.C., which means they can expect some certainty as to what's going to drive the markets, which is fundamentals, earnings growth, and price-to-earnings ratios. So we've actually seen earnings season come through. So earnings have been solid. And what's gone on is the administration has tried to tamper sentiment by talking down price to earnings ratios through trade policies, and the tariffs have tempered sentiment. And that's obviously had a ripple effect through the markets with the drawdown in the S&P and some other flights of capital. So with that backdrop is turmoil coming out of Washington, D.C., feeding through to stock market volatility.
So Clayton, do your thing and level set with us with some numbers. Can you kind of add on to what Will shared?
Yeah, essentially like what Will said, there's a lot of turmoil in Washington right now. There's a little bit of political uncertainty going on as to what the trade policy is, and that ripples through into equity markets, primarily equity markets. That's what everybody wants to keep their eye on, right? So on roughly February 19th, the S&P 500 was at all-time highs. So everybody felt really great. Everything is roses. And then, sure enough, over the span of roughly 2 months, it drew down roughly 19%, peak to trough. And that's really when the tariff rhetoric started amplifying throughout the markets and things of that nature. So you really saw the equity markets pull back because of just how uncertain policy was. And if there's one thing, like we've said on previous videos, that the market doesn't like, it's uncertainty. But on the flip side, in just the span of like a month, the markets have then rallied another 19%, now close to about 3% off of all-time highs. And really what's led that rally over the last month or so is another bid to the tech sector. And that's really what's been driving PE ratios. You saw them contract a little bit during that fall off, but now once again they've started to elevate a little bit, seeming maybe a little frothy at times. But those are really the key names and the key sector that drives kind of the markets right now, including this past rally that we've seen over the last month or so.
Yeah, okay. According to our research, this type of move and recovery over about 100 days has been eerily similar to 2001 and 2022. So let's see what the guys think of it this time, if this time is different. So Clayton, coming back to you, you mentioned that some things are frothy, and Mag 7, I think in particular, is frothy. Is this at all like the dot-com bear of 2001?
I would say that there might be similar characteristics, but they are not the same. Frothy is a good word for what, we may see with the Mag 7 right now. But in 2001, everything was hyperbolic. And that was not just concentrated in 7 names. It was pretty much the entire NASDAQ getting shot to all-time highs through the roof for companies that were pretty much purely speculative. They had no revenue. They had no earnings. There was no secular growth pattern looking forward to them that they could monetize. Right now, a lot of what is frothy is being concentrated in just essentially 7 key names. It's the Mag 7. We've talked about it on numerous calls in the past. It's the Googles, the Apples, the Microsofts, Meta, Tesla, those key names that you see. But a lot of what's different is these companies are the highest of high quality. They have fortress-like balance sheets. They compound earnings like you would never believe. And they are all beneficiaries of secular growth patterns, particularly the entire AI trend going forward, monetizing their cloud segments, building out data centers. So while, like we've said, it might rhyme a little bit, I think that the paradigm and what's structurally driving the markets right now are structurally different than what was going on in 2001 and why that dot-com bubble kind of burst.
Yeah. All right. So, Will, I'm hearing rates and inflation are still in vogue, like my all black everything closet. Could we see 2022 all over again?
I sure hope not. 2022 was its own animal. The 10-year Treasury was kind of 1.5% at the start of the year, ended up close to 4%. We all remember the post-COVID supply shock, inflation, and Fed being behind the curve as rates start to go up, with market rates start to go up, that is, with inflation as well. So even though rates and inflation are in vogue, a lot of people are anchored on the past. There's a good saying in the industry that past returns are not indicative of future results, and I would certainly hope that applies here. 2022 was also an interesting year where both equities and bonds sold off, so diversification really didn't matter, which is most important to have a good, solid financial plan working with your financial advisor so that you're diversified appropriately amongst the two. A lot of investors have relied on the 60-40 portfolio to provide outstanding risk-adjusted returns throughout post-global financial crisis bull market. And it's on that was at the end of a 40-year bond bull market as well. I don't know that we're going to see that environment going forward. Could we see 2022 all over again? If we do, it's going to be pretty dramatic. It would mean rates would go up into the high single digits from here, which would cause a whole nother set of problems. So right now, it's a tricky market environment. Equities are holding in there. And whether we go back and see new lows like 2001 and 2022 is to be determined. But what you should see as this plays out is having a good, solid financial plan.
That's the key theme throughout all of our videos. You know, Clayton mentioned some of our other videos. If you're watching this and you're not sure about some of these topics, we have a whole channel on YouTube that covers a lot of these topics. You can go back and watch some of our coverage on the Mag 7, on tariffs, policies, things like that. So feel free to go back to our YouTube channel and check out our other videos. Guys, I always appreciate the way you two distill these topics for us. So whether markets are echoing the early 2000s or simply riffing off recent history, one thing's certain: smart investing isn't about guessing the next twist. It's about recognizing the bigger patterns and knowing how to respond with clarity, not emotion. Financial plans, always really highly recommended by our team. Clayton and Will, thank you both for your insights, the nuance, and the reality check that you always give to us. And for our listeners, don't forget to download your copy of our free companion resource, Tax Strategies for High Income Earners. You can scan the QR code on the screen or click the link in the show notes. Thanks for tuning in, and remember to stay informed, stay invested, and as always, we'll be here to help you navigate the twists and turns of the market. Until next time.